A very warm welcome back to the channel. In today's recap, there'll be updates on Garuda Indonesia, who are cancelling an aircraft order, Lufthansa seeing profits fall, and JetBlue developments. Why not begin with an aircraft cancellation? The A330-800, part of the broader A330neo program, continues to experience pretty hefty struggles after another reported order cancellation. Garuda Indonesia, one of the few airlines to commit to this variant, has now, according to Aviation Week, cancelled its order for the type. The relatively small order was for just 4 units. However, it represented one of the only still standing orders for what is an incredibly out-of-favour variant. Garuda Indonesia does already fly the A330neo series, focusing on the more popular Dash 900, with fleet data indicating the airline has 3 of these to its name, with 1 unit listed as parked. The A330neo's average age of 5 years in the Garuda fleet, with the jet 10 years younger than the A330ceos, and a commitment to the A330-800 that I speak of came just prior to the global pandemic, when the company had already secured deals for the Dash 900 and was seeing them delivered that year. The A330-900 deal included 12 units, but fleet data indicates that Garuda's A330neo operation has seen deliveries of just 3, all in the same year. Their letter of intent for the A330-800 was placed in 2019 to be exact, but now the intent appears to be no more, and essentially speaking, the airline is looking elsewhere. Reporting indicates that despite the cancellation, Garuda Indonesia is still very much interested in acquiring additional wide-body planes. However, it believes that entering the leasing market is a more suitable option for the sourcing of additional jets. Interestingly, this means for Garuda Indonesia, with all things considered, it already has a solution in mind. However, the ramifications for Airbus and the A330-800 variant are seemingly more serious. The A330-800 remains a highly unfavourable aircraft type in the Airbus portfolio, and has continued to struggle to attract any firm interest. Any customer that is seeking a plane like the A330neo will always venture towards the A330-900, whereas the mere mention of a Dash 800 will seemingly never come up. A lot of people describe the state of the A330-800 as often comparable to the upcoming 777-8. However, at the very least, the latter variant, while being around for over a decade, benefits from not being built and or certified at this point. Since both of these variants' conception, they've struggled to obtain market interest, and that's really only looking to continue. Over to German flag carrier Lufthansa, whose overall operating profit fell in the third quarter as they faced continued pressures on their ability to succeed. Their operating profit was at around 1.41 billion USD, which did align with expectations, but did represent a fall of almost 10% year over year. While having fundamental problems, Lufthansa expected this result to shape up the way it has done after a positive third quarter and conclusion to the summer season, but it is also struggling. So, just what is happening at Lufthansa that is making them struggle? Well, firstly, aircraft delivery delays are plaguing the airline. From types across Airbus and Boeing families, Lufthansa has been unable to take delivery of planes that it desires on time, and worse still, schedules are only continuing to balloon out, which makes it pretty difficult for a company to forecast for the long term. And if it's not delivery delays, it's also the certification issues, such as those on the 777X, that are making future planning difficult. To mitigate the impact felt by this, Lufthansa is being forced to retain less fuel-efficient aircraft, such as the A340, 747-400, and even at times A380, in a bid to ensure it can still have solid levels of capacity. With that being said, while there are negatives involving the retaining of these older planes, with the company coming out and saying it is losing hundreds of millions with planes that shouldn't necessarily still be in its fleet, and with no end in sight to these troubles, their concerns are continuing. But at the very least, it can seek comfort in understanding that it at least has the ability to cover some of these delays, whereas other airlines are feeling the brunt far more. Away from delivery delays, the airline has inevitably seen expenses rise. We might recall at the beginning of this year and last year, there were some pretty big headlines surrounding labour deals, and this included strike action taking place. Well, Lufthansa has looked to rectify all of these with its key employee bases, which means their expenses as a business have risen, and now they're trying to cut them as well where possible. Airline executives have highlighted the less than ideal punctuality across its German key hubs as most recently a concern with on-time performance and completion rate. Others would argue that a lack of investment and fundamental decisions that have been proven the wrong ones have also left Lufthansa as a damaged brand that is not quite what it once used to be. Despite an overall operating profit, revenues were solid, with them hitting 10.7 billion euros, representing the strongest third quarter performance in company history. The results hardly a shock. Most airlines around the world nowadays are seeing record revenues, but of course there are other underlying issues that need sorting. On to the final story, and JetBlue themselves have posted another quarterly loss, this for their third quarter performance following a pretty tricky multi-month period. The airline's underlying results showed a net loss of USD 60 million, but operating revenue was able to increase to USD 2.4 billion, revenue being one of the more stronger points, with most, again, reporting something similar. JetBlue's executives, however, believe that they met all financial targets and progressed with the implementation of their Jet Forward strategy. Customer satisfaction levels are also said to have increased in the last few months after they invested in the delivery of their services to make sure that customers saw just how reliable they could be on a daily basis. They further stated that demand remained healthy, largely spurred on by competitive capacity, most notably seen in the Latin region. There was also a ramp up of initiatives within the business to boost revenue. So what about JetBlue's Jet Forward that I most recently mentioned? This was a previously announced strategy with the sole intent of stabilizing the business and focusing on a more successful and also secure financial future. Well, the airline is progressing with the overall rollout and implementation of this, which includes a means to drive an operation in a reliable manner. On-time performance actually improved by over 12 percentage points year over year. The airline has optimized as well 20% of its network. This has included the 15 station closures and 15 route adjustments. Now, all of these changes, while on the surface may seem to be unfortunate and sad ones, do mean that the airline has been able to redeploy aircraft in a bid to strengthen leisure-focused routes that originate from northeastern points. Think of it as a network shuffle, with JetBlue trying to focus on routes that it believes will be profitable for the long term. Airport lounges are also coming to John F. Kennedy International and Boston Logan in a bid to align with other major international airlines and those within the US. They've raised $3.2 billion in financing to retire some of their existing debt while receiving expenditure refunds for 2024 and 2025. Any thoughts on today's aviation news recap? You know the best place to leave them is down below in the comments. Thanks a bunch for your support. Take care, be safe, and I'll see you tomorrow for another industry recap.
And we'll fly.